when I was a kid, because that's where resiliency starts in my life story. So when I was in second grade, I was diagnosed as ADHD and dyslexic, and had been kicked out of kindergarten. Literally, I was in a private school kindergarten. I was kicked out because I wouldn't behave. And here I was in a public school, and they didn't know what to do with me either. And so my mom finally got me diagnosed, and I went to special ed. I was the kid on the loser bus, right? The little yellow bus, that was me. And I was in special ed for 2.5 years. And the reason why I got diagnosed was because in second grade, when the teacher would put a book down in front of me or a piece of paper in front of me, I would throw it at her. And when I finally threw the chair at her was when they got me diagnosed. So I'm just saying, right? Like, we all have our story. We all have where we start, right? And what do you need as far as resiliency? So I was diagnosed and I was put into a special ed class, and I was there for 2.5 years. And I followed my special ed teacher to different schools. I would get on the bus, the public school bus, not the public school bus, the public bus, and I would go 2 hours on the public bus. So I'm now in third grade and fourth grade in order to go to the school where my special ed teacher was, because it was a publicly funded program. My mom didn't have the money at that time. She didn't have the money to offer me a better program. That was the program. So I would drive 2 hours. I would get on the bus and go 2 hours and 2 hours back in order to come back from my program. And I remember sitting in the corner when I first started this program, like literally I'm sitting in the corner. You got to remember, I got literally diagnosed because I was throwing things in school, which I think most kids don't normally throw things in school, but that tells you what a pain in the patootie or pain in the ass I've been all my life. So I was sitting in the corner and I'm like, no way, this teacher ain't going to make me learn. Nope, I'm not going to do shit in this class. There was no way. Right. And so, but then I noticed after about a week, they were playing this math game, and math was something I was good at. Spelling, forget it. Christina may still have anger issues.
I saw that. Yeah.
Yes, Bill Tan, I still have anger issues. That's part of where I'm going to is resilience.
And with 2 ADD people here with those things that like the ticker at the bottom is
got to get our attention.
Yeah, right.
Right. We could be twins, Matt, Tandy. All right, there you go. Yes, Matt. Hey, let me get to the end of my story, Matt. You're going to like my conclusion here. You ready? So I'm sitting here in the corner and I'm like, there is no way. But my teacher played this game called Trianimos. You guys know right? Dianimos, right? Just radio, like this was Trianimos, 3-sided. And the game was, if you were learning how to add, you could add the two numbers. If you're learning to multiply, you could multiply the two numbers. Well, math I could do, right? So I kind of went, I think I want to do that, right? So that's how she got me out of my resilient, like my determined, my angry, messed up corner was by getting me interested in what I could do, which was math. And I could do math and I could do systems. Now, here's the thing. I was never a stupid kid. I couldn't do stuff. And so I felt really stupid, sincerely. Like I felt really stupid, and I called myself stupid, and I was teased a lot, right? Who knew how many teases there are for the name Christina? But there's a lot, actually, just saying. But what I could do was math, and that's how my teachers got me started again. So I learned 8 years of math in 2.5 years of schooling, and I learned 5 years of reading, and I learned 3 years of spelling in 2.5 years. And my daughter, who inherited the ADHD and dyslexia from me, will ask me how to spell something. And I go, honey, you don't understand. I never got past third grade grammar. I'm sorry. I can't help you with it. She's actually better at it than I am, even as a grown-up. So when you talk about resilience, it's like, what is it that makes me resilient? Is it the teasing for being the ADHD dyslexic kid that makes me determined to be something better? Is it the fact that I grew up in a mixed neighborhood with wearing my sister's hand-me-down clothes? And so I got teased because I guess I was taller than my sister at the same age. So I had the floods, right? The shorter pants. Is it because I got teased? Is it because I got teased for being the loser on the little yellow bus, right? But the thing about being ADHD or dyslexic, or about having a tough time in school, or having a family that wasn't, my mom was a single mom with 3 kids, and, she worked out of the house, and you know, you just kind of go, if I don't make it right, it's not going to get right. And it was when I was 21 and I was leaving an abusive relationship, and I was literally packing up while he was at work so that we didn't have to have a conversation about this, which wasn't going to go well, was when I realized I really am the only one in charge of this, right? It has to be me. It is completely, as Bill says, it's completely up to me. So that's when I started doing a lot of work, personal work, because I kind of went, well, what's consistent in my life is this drama. And I can go from relationship to relationship to relationship, or I can go from school to school to school. I can go from job to job to job, and there's drama everywhere. Who's the consistent person in the middle of this pattern? And that's me. I am the only one in the middle of this dramatic pattern. So I started doing therapy. Started with behavioral, went to humanistic, right? Started doing personal growth workshops, right? Went into regression therapy, went into past life therapy, I kind of in meditation. And, 15, 20 years later, I just wanted to get to where I wasn't really hurting anymore. And I'm going through this detail because I don't think I'm the only one in this meeting that had a tough childhood. I don't think I'm the only one in this meeting that had, a poor mom who had to, basically, leave us at school for hours until she could pick us up because she had a work meeting. I'm not the only one who, had dads, 3 different dads. I'm not the only one who faced this, right? So what did it take? I just wanted to get to where I felt solid as a human being. I felt capable of running my life without the drama. And what happened was I ended up getting past that. I didn't just feel capable of running my life without the drama. I felt capable of running my life. I felt capable of making decisions that could support my own emotional freedom, my own mental freedom, and my own financial freedom. So I know it's a big story, and I apologize for going through my big story. I don't think I've ever shared my story incomplete, right, on the emotional, mental side. But, Patrick, my story. So, and you've heard pieces and parts of it, but that's the whole story stringed together.
Yeah.
Where does resilience come from? Resilience comes from the decision that you're going to choose to have your life for yourself or for your family. But that's really where resilience comes from.
Right. Yeah. And I think one of the, I remember we talked the other day, I had remembered the dyslexic part, but I never knew the part about the ADHD. I don't know. I had just not heard that part of the story. And, and I was diagnosed with ADHD when I was 26. So it was a much different experience for me, I think. I can definitely relate with the teachers. I mean, I remember being put in a corner, locked in closets, things like that, because I was, disruptive. And
That's
so,
right.
yeah. So
I was kicked out of kindergarten because I was disruptive, right? Yeah, that's right.
And along with it, though, come great things. I feel like that's a great fountain of my creativity is my ADHD. And I now embrace it, and I work to have my environment work around me. And
That's
so I know that, in your position, you do a lot of consulting. You work a lot in ground level consulting. You work a lot with investors. And I wonder how, I always feel like in what we do in real estate investing, we tend to be this Isle of Misfits. Right?
We're completely an Isle of Misfits. That is exactly what real estate investors are, is an Isle of Misfits. If you've ever considered yourself a misfit, get into real estate because you're going to find yourself there.
So talk to me a little bit about how you see the resilience of our community, and what do you think it takes to really fit in well in our community, and why we see why are we this Isle of Misfits?
Okay, so let me tell a little bit more about my story. and then I'll go to the Isle of Misfits. So I do all this work and I get to a point of accepting myself as myself because there's nowhere else to go but yourself, right? And, but then I discovered what's the beauty of ADHD and dyslexia. You see, the beauty of ADHD and dyslexia is that we think differently. The fact is we're creative and we're able to see a much bigger picture. And because we can see the big picture, we're not good at the details. Forget the details. Columbus sailed the ocean blue in I don't know what year, but I know he sailed it, right? We see the big picture, and therefore we're perfect for design, and we're perfect for inspiration, and we're perfect for being able to build something with an overview from the top down. So why do I get paid for my consulting work at $350 to $400 an hour? Just so you know.
Just in case you're wondering.
Just in case you're wondering how much this costs.
There's no coupons.
No, I do give loyalty discounts though.
Okay, there you go.
But the reason why I can do my consulting work is because I can see a whole real estate portfolio.
Yeah.
Because I can see it in my brain and I can see how the pieces join together. And because I can see how to take a portfolio that matches where you are now, where you want to go, what's the lifestyle you want to live while you're getting there, I can take the map of real estate and everything that's possibly and available to you. And I can say, okay, baby, here's your banquet, go invest. And here's why you choose that. Right. And then I add the math behind it with all the due diligence and the being able to understand math and the finances and stuff. You see, that's my gift. Because I'm ADHD and dyslexic. The gift of the ADHD mind and or the learning difference mind is that we think differently. And you can build a life that's based on the gift that you bring and no longer on the concept that there's a deficit here. Because there's not. There's actually not a deficit here. We're no different than the brilliant engineer. We're no different than the brilliant artist or the brilliant musician. We just have this diagnosis thing that they started with from the negative instead of seeing the gift. So that's my consulting practice. So how does my resilience help me? My resilience helps me because inside of real estate, I've been investing for 30 years. I think almost 35 now. And I can't get any younger in my story about how old I was when I started investing. So now I just says, well, I started investing when I was in my mom's womb. So because I just, like I'm 52 and I've seen a lot of work in real estate and I have fucked up in real estate and I have done great in real estate. I have earned $1 million in real estate and I've lost $1 million in real estate. My husband can attest to it, just letting you know. Right. So I'm not making this up because it's entertaining. I'm telling you the truth. Right. I literally have gained $1 million in real estate and lost $1 million in real estate. Obviously I've gained more than $1 million, but I'm just saying, here's the thing about real estate. The thing is real estate's going to hand you your ass at some point. It's going to hand it to you. Yeah. You can count on it. Bruce Norris. I can think of 2 stories.
Right. Yeah. Well,
2 stories of Bruce Norris being handed his ass. Thank you very much. And if you're not in the Bruce Norris network and you haven't gotten their recent newsletters and conversations, like he just had his ass handed to him last year. Yeah. Right. And Bruce has been investing in real estate longer than I have. Yeah. He's done more flips and more stuff in real estate than I have. Yeah. It will go awry. So the question about real estate isn't, the question about real estate is not, will it always go well? It's going to go well and it's going to go bad. Yeah. You got to count on that. Yeah. Right. My real estate breakthrough show. Why is it called Real Estate Breakthrough? Because you're going to use real estate to break through to your financial freedom, but it's also, where did you break through? One of my questions on my show is, what is the worst experience you had in real estate? And how did it help you grow up? Right? Like Bill says, it's not if, it's a when it happens. So you need resilience in real estate because in order to win at the long game, You need to be able to keep applying yourself. When it was 2008 and I had lost over $1 million in real estate, and I was watching my portfolio go down, not by $10,000 a month, but close to $100,000 over and over and over. And when you're doing those calculations, they feel like crap, and you freeze and you get upset or you throw a fit, whatever your particular dynamic is. I froze. That was my dynamic. I froze.
I'm a freezer too. I know what that's like.
I froze. And my husband's having a lot of conversations with me, right? Like, what are you doing? Why
and
are
all
you
the conversations
freezing?
are really taking place. Like, I don't have time to talk to you because I have enough conversations.
I have so many conversations in my head right
inside.
now.
Yeah.
Yep. It's when you need to jump in. So see, well, thank you, Henning. That's correct. I froze, but then I remember I was sitting in my chair thinking I'm a big fat special ed loser. I clearly don't know what I'm doing. I thought I had done all this work. Aren't I really great? Nope, maybe not so smart. Maybe I'm not so great. It boiled down to one question for me. When I am 80 years old, what am I and who am I going to want to be? And will I want to be the lady that walked away from real estate? And I said, no, I can't. I can't live with that inside of myself. I can't be the lady that walked away. So I didn't. So I worked it out. I straightened it out, right? Did some short sales, did some settlement agreements, sold everything I had, everything, so I could sort it all out. I got rid of all my doors, got rid of all my, well, most I had doors, most I had rental units at that point. So resilience.
Yeah.
So the question is, who are you going to be in that moment? Because it will show up. And what's the question you're going to ask yourself that's going to keep you going?
So one thing, you know, and I remember in 2015 hearing you speak about, you know, hearing you speak about that. It was much more fresh at that time. And if I remember correctly, at the time you were, I think you had just acquired your dream house, right? So you were recovering, but it was, or it was being rehabbed, I believe.
Okay, it's okay. Go ahead. Keep talking. Tell me what you think the story is, and I'll straighten it out. Go for
it. No, so I remember at that point being new and thinking, and I didn't understand any of this, and the fact that you have to, and even as Bill said a little bit ago too, you know, it's not if, it's when. And I think as real estate investors, we have to go into it, realize it, knowing that. And I think that's an important thing for those of us, you know, obviously I've only been around a while. You've been around, you know, forever. And, you know, we've got some others on here. Well, not quite there yet, but I think that's such an important thing for us to instill in people. I mean, we know that, and I'm sure you see this in your club. We all of us know this that have been around for a little while, that the people that come in often go right back out. And I think that's part of it. I think that it's the resilience even at the start, right? It's knowing that I remember in my first job in sales, they said the hardest thing to do is open the car door, right? And so I remember you saying back then that it only took you a little while to get back out there, and you knew that you had to, you were starting writing offers on the hood of your car again. And so I wonder, so I look at, we haven't really seen the downturn. I mean, we've seen this kind of crisis in COVID, and I know there's a lot of people out there that are suffering, have suffered, making, you know, still might. And I wonder how you draw a parallel between what happened in 2008, and after hearing your stories there, and I've heard now several of them, it's different angles. I mean, what does that resilience look like now as opposed to what it looked like back then, both for you and what someone should expect to put their mindset towards?
So let me double back to a topic I didn't finish, which is, if you're a quirky being, why is real estate a good home for you?
Yeah.
Let me double back to that because
The Isle of Misfits.
Yeah.
Yeah.
The Isle of Misfits, because we are an Isle of Misfits. I can't tell you how many people I meet that are ADD or ADHD that are in real estate.
Yeah.
There's so many of us. And let me double back to the Isle of Misfits, and then let me move on into like, well, what do you do with the COVID thing, right? So, because I think that's effectively your question is, what are you going to do with yourself in COVID or after COVID, right? And you can redirect me if I didn't understand the question right.
Yeah.
So the Isle of Misfits, the thing about real estate is because it's such a broad field, if you're good at math, you can primarily do math. You can do hard money loans. You can calculate the returns on a flip. You can read contracts if you're good at business. If you're good at business head, you can read contracts. You can project manage. If you're good at people, right? You can talk to a team and put together a team and a crew. If you're good at design, you can design the interior of a flip. You see, real estate has so much space in it that literally it takes multitudes of personalities and strengths to actually do a real estate project.
Yeah.
Right. I tried to,
The team sport.
The team sport. It requires to be a team sport because it's so complicated, which allows for this Isle of Misfits to find their place in and among it, because you can't do it alone anyways. It also often allows you to do it on your own time. So people like me or Patrick, like you, who are like, hey, look, I'm really good for this many hours of a day, or I'm good for this long and then I need a break, and then I'm good for this long and I need a break, and I'm good for this long, right? Yeah. Like we get to define our own schedules.
Yeah,
that is the freedom we need to be our best selves every time we show up somewhere, right? And real estate lets us do that. Whereas when I'm in a 9-to-5 job, right? Like literally, I'm like, do I really have to go again? I don't want to go again. Don't make me go again. I don't want to get on the carousel again, right? Even when I worked in childcare, and I love working with children, right? I love children. I love working with children. Even in childcare, I'd be like, I can't do it. So the Isle of Misfits of real estate is that it takes so many different personality types to be successful that you actually can find your slot here. Versus like engineering, where you kind of have to be an engineer brain, right? Or a teacher, where you kind of have to get along with kids, right?
Yeah.
Whereas real estate, there's so much space. So therefore in COVID, so the question is in COVID. So I think the piece about COVID to me is two parts. There's your real estate investments, or there's what you want to do as a real estate investor. But then there's your mind, your resilience, right? So it's easy to be depressed in COVID, just straight up. It's easy. I miss going to the movies. I know it's a really weird thing to miss, but I miss the process of going to a movie, walking into the mall, holding my daughter's hand, ordering the popcorn, sitting down in the chair, being finishing half the popcorn before the movie even starts. I miss, thank you, Andy. I miss hugs. I do. I miss hugs. It's really easy to be depressed, right? And we're a high-risk household, so we're on lockdown as much as almost anybody else is, if not a little more than some people. So the thing about COVID, I think, is if you're not depressed, then what you want to do naturally rolls out of you. It's when you are depressed that it doesn't naturally roll out of you. Thomas, to me, is a great example, because Thomas just rolls, right? Thomas, he is somebody you meet who's going to stick his hand out and say, hi, I'm Thomas, and you need to meet this person over here. And let me tell you about what I got going. Like Thomas is somebody who, when he's rolling Thomas, you know he's Thomas, right? You don't question who he is. He's so upfront. And so I guess the question becomes, who can you be every day? Smell of popcorn. I love that. Thank you, Janice. Sorry, it popped up. It distracted me. So you're just going to have to deal with it.
Yeah, this new chat feature is hell for a clinically ADHD person, and I was trying to figure out how to turn the damn thing off. It's not built for us, but it's okay.
It's okay. It's not built for us, but it's okay.
Yeah.
So I think in COVID, I think the question becomes, yeah, I can talk to what we want to do with COVID.
Yeah.
Right. And I'll talk to that. But I think first it becomes, how do I not be depressed? How do I get the time I need to roll forward, to roll into the naturalness of me? Because when you do the naturalness of you, then investing advice works. Mm-hmm. Right. So for me, it's been playing soccer in the park, far away from everybody else with my daughter. For me, it's been trying to take our dog for a walk. We now have a new puppy. For my husband, it's been the new puppy, because he's always wanted this particular type of dog. So I'm like, he's like, oh, we got to wait. And I'm like, no, we don't. We got to get your dog today. It's what we got to do. Right. What is it that keeps you from feeling like you got to sit in front of a video again? Mm-hmm. Right. Calling a friend. For a while there, I just had to call. You're welcome, Thomas. Love you. For a while there, I had to talk to a girlfriend every day. Just because I was starting to just go haywire, and I needed to talk to one of my peeps, one of my chicks. And I made sure I called somebody every day. And I did it for like 5 or 6 days, and it made the difference. So
sorry.
That's fine. I was going to get to like COVID investing, right?
Yeah,
like what do we want to do with COVID investing, right? So to get to real estate, the boring stuff. So real estate. So COVID investing. When we first started with this COVID thing, I, along with a variety of other people who like to play at the hobby of economics, said, we're going to have a bloodbath. This is going to be a pain, right? People are not going to be able to leave their home. People are not going to be able to buy goods. People are going to lose their jobs. They're going to be displaced because they can't pay their rent, right? The IMF, International Monetary Fund, was saying that the United States was probably going to lose about 6% of our GDP. And if we lose 6% of our GDP, that is several $1 trillion. To be accurate, I believe it's 7 trillion, but I'd have to go back and do the numbers. So far, we've had economic stimulus of about 3.5, and we're about to add another 2. I wouldn't be surprised if our government goes all the way until we get 7 to support the lack of the GDP that we experienced just because of the lockdowns. What has that done? What that's done is it's created a Band-Aid across real estate and stocks. But we're not here to talk about stocks. We're here to talk about real estate. It's created a Band-Aid across real estate called people are still paying their rents, right?
Yeah.
It's called people are working from home. So if you have a B or A class real estate property that you're renting out or you're engaged in, then you're probably still getting rents. I've got a lot of people. I keep asking because I'm curious, right? I keep asking people at my meeting and on my podcast, like, what are you seeing in as far as your tenants? Are they paying rents? Yeah, 99.9 are paying rent, or 98% or 94% are paying rent. That's true, except for some of the mom and pops. Some of the mom and pops, whether it's single families in C or D, right? Or multi-units owned by small people like me. What bad prayer, but he was bad going in. Okay, I missed that one. They're the ones that are going to be suffering because of the moratorium on evictions. Once the moratorium on your forbearances on your mortgage payments disappear, that's when we're going to see the unfolding.
Yeah.
But here's the piece for it, right? For me is we're not really going to see it in multi-units. And I'm not even sure we're going to see it in some multi-units, mom and pop size multi-units. So that would be 5 units to 30 units. We might see it in there. And I really don't think we're going to see it, surprisingly, in single families, right? Because of this whole, like, I'm in a house, it's COVID, I can't leave the house, I need a bigger house. Yeah. I need to be somewhere I actually want to be, right?
Yeah.
So yeah, and Matt's right there. Matt, most people are paying rent. When they talk about eviction tsunami, it's only projected, right? And so keep reading all of Matt's chat because I can't read it, but you guys can because you're not talking. You can look it up yourself. Learn
I
from the
have
experts
placed
around
my
you.
poll box in front of the chat
There you
thing to
go. So you
keep
can't
it
see it.
distracting.
Good. Not a problem. But if you guys, I mean, seriously, for the experts that are here or people who
Yeah.
listen to economics, put it in the chat. I'm just one chick, right? So, make sure that you share your wealth and knowledge as a community, because that's how we help each other. So we're going to see problems. Again, I think we see it in the mom and pops. I see the more sophisticated investors, the stories I'm hearing from them is they're doing things like cash for keys. Oh, can't pay, I can't evict you, but let's do cash for keys. You move out, let me help you get into a better place, right? So they're actively working at replacing the problems they're having, and they're making it a priority that people pay their rents. They're not having the rental payment problems that we expected. Those units are not going to be the ones that are going to be on the plate. The smaller mom and pops, in my guess, is the 5 to 30s that are going to be on the plate later when they run out of cash and they're going to be foreclosed on. That's when we're going to see some things on, see the blood, right?
Yeah.
The other thing we're going to see is we're going to see unemployment, right? So we're currently at just below 7% nationally in our unemployment. But if you look at people who are marginally employed or people who are part-time employed instead of full-time employed, we've got 12% unemployment. Little bit of math again, right? So I did the math on our gross domestic product and how much we're going to lose and how much money we need to put in to try to support our country. Well, when you're talking about small businesses, so anywhere from 47% to 53%, depending upon which data point you're looking at. Did I tell you I did good in math? 47% to 53%, depending on which data point you look at, is the percentage of our employed population that is employed by small businesses. Officially, small businesses are 500 people or less. Yeah, there actually aren't very many of those. The truth is, really, when unemployment pay gets $1,000 a week, my tenant just got a raise. That's what we're looking at. That's why they're paying rent. What happens when it's unemployment? So the truth is that 95% of those people, this almost 50% of our employed population, work for businesses that have 10 employees or less. That's where we're going to see the problem. We've already seen, this was months ago, 160,000 small businesses have permanently closed. Yeah. I believe it's going to be 250,000 at least. There's a Forbes article that just came out that said it was 240,000. Okay. And that was between temporarily closed and permanently closed was 240,000. But I think we're going to see 240,000. I don't think that's actually an unreasonable number at all. So how much of our unemployment are we going to see that's going to be with us after COVID is done? I think we're going to see a good 12 to 16% of unemployment that is going to be with us, not because people don't want to work, not because people can't work, but because there isn't jobs available out there because too many small businesses are closed. But again, this effect's going to be temporary. This effect is going to be, because we're Americans. We are determined people. We believe in filling a hole. We like recreating small businesses. That's why we have so many small businesses. So guys, this is only going to be a year or two that we're going to see before we start filling in that gap. People are going to start getting their feet on the ground. Entrepreneurs are going to reopen. They're going to find people who are going to help fund them. So when we're talking about opportunities in real estate, we're talking about residential units, 5 to 30. We're talking about potentially, right, being able to deal with the unemployment means that potentially we are going to see some single family defaults because people don't have the jobs, right? So we are going to see some defaults there, but I don't think it's going to wash the field of single families because financing's still pretty stiff. Mm-hmm. So it's not really that financially unstable. So we're going to see it not because people were over leveraged. We're going to see it because people don't have the jobs. Okay.
So along those lines,
I can get into retail and office too, but I can stop there.
Well, yeah, I want to hear more, and I want to talk more about those opportunities. At the same time, I think what I'd like to hear your opinion on is, where are we? I mean, let's look at in the timeline here. Where do you place us? So when we talk about, let's say 0 to 100. No, so 100 is basically we're recovered, we're filling in the gaps,
Okay.
and zero being the impact, right? Are we even at zero? Or where are we?
Okay, so
Your
we're
opinion?
still somewhere between 0 and 10. Like
Really?
the impact of COVID is still unraveling,
And
right?
specifically in real estate, or are you speaking more broadly?
I'm speaking more broadly, but let's talk about real estate for a minute, right? Because I think it's a really knowledgeable question, right? So Ted McElvoy talks about this, and I think he's a really good person to follow. By the way, if you're looking for somebody who's an economist to follow, he has lots of videos out there. McElvoy, look to him. So he originally had a video at the beginning saying that there's going to be this unfolding, and it's the unfolding that we're not seeing. Okay, we will see it, but we're not seeing it. So the unfolding is there's a lockdown. People don't work. They lose jobs. They don't have pay. They don't pay rents. They don't pay their mortgages. Then we start seeing vacancies and non-performance on mortgages. Then we start seeing foreclosures, whether it's multi-units, they're not paying their rents, the landlord can't pay his mortgage, or whether it's single families not paying the rents, right? So there was this whole timeline, like a wave, right? Like a ripple effect. That would take, that he thought at the time was going to be anywhere from 9 months to 18 months after the shutdown. Well, we aren't seeing non-payments of rent on the broad basis we thought we were going to see. And we're not seeing people not paying their mortgages on their homes the same way. We're seeing the K recovery, okay, one leg up, one leg down, recovery based upon social economics, right? So right now, I'm still waiting for the beginning of the unemployment to truly take effect. If you have $7 trillion lost in your economy, but it's filled in by $7 trillion worth of debt, right? And you're handing the money out to people, which is what we're doing, and you're buying stocks in order to make sure that the stock market continues to perform, which is what they're doing. Then the initiating event called non-payment, it hasn't happened yet. Not completely. Not completely. Up here in this K, people who own stocks, people who have tech jobs, people who can work from home, people who work at call centers. Bank of America sent their call centers home, and they gave them securitized routers. They mailed them securitized routers so that they could take phone calls and take security, what would normally be considered safe information over the phone. And now they're working out of their bedrooms, right? So if you were one of those, you still got a job. That's this part of the K. It's this part of the K down here. It's based on social economics. It's based on how severe this shutdown is. It's based upon how much COVID showed up in that particular region. And that's where we're going to see the difficulties, but that's being softened by the economic stimulus and support. So we haven't seen the full drop yet of the effect of COVID. Now, it means there's hope, right? Because I know there's an important concept. There is hope because the government may have done enough to truly soften the dropping of the pedal in the middle of the pond and the size of the ripples. Because we accepted $7 trillion in debt, we might actually have a more stabilized economy when COVID is quote unquote done than we would have if they hadn't done that. But there's still going to be fallout. The fallout for us as investors can be to our advantage if we're positioned for it. If you're at the effect of COVID, the beauty is that you do have things that are protecting you for now, and you potentially will have a job when you get out there.
And kind of along those lines, I wonder, it hit me. I mean, two things. One, so you touched on it at the end, and the hope is that instead of having this tidal wave, right, I guess, is that we have these kind of more manageable ripples. I'm curious as to, what first up, what do you see the percentage chances of the tidal wave versus the other, in your opinion? Where do you think, where do you think we're going to be at when I mean, what's that wave going to look like?
Again, I think it's going to be 12% unemployment, not 25, right? So when
Okay.
things get meaningful, so the Great Depression, we had 25% unemployment. 1 in 4 were not employed. We had food lines.
Mm-hmm.
We actually have some food lines right now. I know because
Yeah.
at my elementary school, they're handing out breakfast, right? So a 12% unemployment, that's half of 25%. It means we're going to have a hard time, but we don't have to have food lines in every major city.
So speak a little bit to, now we've got a good mix of people here. And, while we're talking on this, I want to kind of throw this poll up as well, if you guys can fill that out. But
Oh, okay.
I wonder what...
Did you just do this poll or did you have it prepared before?
I had it.
Okay, I was going to say,
I meant to throw it up earlier.
That's a lot of multitasking. If you prepared this poll while I was talking, I was going to be seriously impressed. No, and by the way, guys, look at the chat. So there's a lot of good information and articles that are being referenced in the chat about this. So don't just listen to me. Use your community. Okay, go ahead.
And so speak a little bit, Christina, if you will, to in the vision that you have in your mind as to what this is going to come out, or and I know it's a crystal ball, but that's kind of, you're the crystal ball lady.
Sometimes. So I'm gonna grab my water. Don't just.
Yeah. So what I'd really like to know is what you think it's gonna the next 6 months, 12 months, what is that going to look like? How are we going to be impacted? The people in this room, in this Zoom room, in this virtual
It's fine. This room is good. I'm good.
Yeah.
I'm good with the hypothetical room.
What does that look like? What do you think the actual impacts? What do you think? And let's going through the maybe different facets of different types of investors we have. What do you think that's going to translate? Where the rubber meets the road?
Okay, so I think where it's going to translate is starting where you are now, right? Will probably dictate what it's going to continue to be, because we're going to continue to have shutdowns and rolling COVID for 3 to 6 months. We're not getting the vaccine. We have a vaccine, which is great. And I'm super glad we have a vaccine. Like I said, I'm a high risk household. So I'm super glad because we're busy trying to figure out how we're going to get the vaccines. So the vaccine is going to help. And it's going to start creating opportunities for people to go out, which will create more jobs, right? So people have been furloughed. So for those people who work in bartending, work in nail salons, work in hair salons, like we're going to start to see those open again. It'd be great if we saw them open in the next 6 months or so, right? And those are the businesses that are still working, that made it through COVID, right? I said there's going to be, I think, 250,000 businesses that are going to be closed permanently. Yeah. So if your business, where you used to work, has closed permanently, what do you do?
Yeah, I can look out my window here in Mexico City and literally just out this window in my office, and I can see 6 businesses that the majority of ones I can see are closed. Yeah.
Yeah, I'm in America and I'm in LA. So I apologize for the bias of my information. No, I'm just being very honest. I really am.
Well, I mean, I
only know LA, right? I mean, if
it's
you're
the same thing. If
you're in it's a friend of mine, I think it's Arkansas. Her mom's in Arkansas, and they're like, "We don't wear any masks. What are you talking about? We don't have a shutdown here." Yeah, because you guys live an acre apart from each other, right? So their shutdown is completely different from ours, and the way they're managing it is very different because nobody lives right next door, right? So, so therefore, you have to remember it's highly biased. This information, this conversation is highly biased based upon a place that has had shutdowns, and it's a highly densely populated place, right?
Yeah.
So I think we're going to see in 3 to 6 months, we're going to see the return of things being reopened. And if the place you used to work at has been closed permanently, then I would start putting your list together now of the businesses that you see that you're going to want to work at in the future, because when they start getting ready to hire, you want to be in that, you want to be there. You want to say, hi, I'm a chatty person. I like to talk, or I'm a great at haircutting, or I'm, I know how to make an awesome cappuccino, or whatever it is that you're good at. Be prepared, because then you'll be ahead of this unemployment. It doesn't have to affect you. You can choose to be ahead of it, right? So if that's your level right now, then choose to be ahead of it.
If for the investor?
Huh?
And for the investor?
And for the investor. So for the investor, so my suggestion, because again, I've identified which asset classes you might want to go for. So I talked about mom and pop's multi-units, if that's the asset class you want. I talked about single families potentially being at risk. Thank you, Janice. I'm going right there. Small strip malls and retail. So let's talk about that, because I didn't finish talking about that. So small retail is going to have a hard time, right? And I can project about office, but I'll do retail first. Small retail is going to have a hard time, because there are businesses that are never going to come back in that way. Bookstores are going to have a hard time. Does anybody remember when there was a big bookstore on Lake Avenue here in Pasadena, and there was another one that was in the South Mall, right? It was a bookstore and it closed. Why did it close? Amazon, right? The industry itself. Janet, what bookstore? I'm sorry, honey. I can't remember if it's Barnes and Noble or if it's something else. No, it's not Vorman's, but yes, they've closed the location as well, right? Vorman's has closed the location as well. So if you're going to own in retail, the thing about owning in retail is understanding that you're in the business with your tenants. So you want to put tenants, if you're going to buy retail, because it's going to be stinky and there's going to be lots of it, especially strip malls, right? Don't do a bookstore.
Yeah.
Right? Don't do a bookstore. Do something people have to go to. They have to go to a nail salon. People always want to go out to dinner. I don't think that's going to disappear, truth be told. People need to buy groceries, and they will buy groceries. Barnes and Noble, thank you, Andy. They will buy groceries in person. They just may not buy them as much, but they're not going to disappear. Whereas a store like Sears and JCPenney's are having a hard time, even though they're major stores.
Oh, we could see that shift even in the market, right?
It was already happening, right? So all this is going to do is make that shift more severe and more noticeable. It accelerated what was occurring. People were already switching to buying online. So you don't want to fill your retail strip mall with businesses that sell goods. Basically, they need to sell services that require people to be there.
Yeah.
Right? And, buy mini storage. That's a good one, Herring. Buy mini storage. So no, and storage, by the way, storage, industrial and not wholesale, warehouses have continued to increase aggressively.
Yeah.
They are the counter investment. Bonds are counter to when stocks go down. In this particular case, they went up. Office, I don't think I can make a projection on office that I would feel safe giving, truth be told. Right? So
why is that? Why is that?
When you look at what I've read, I haven't read data a lot in the last couple of weeks, but when I was reading it at first, there were major companies like Google saying, oh no, as soon as we can get back together, we're going to open our campus, and that's the way we want to do business. That's how we do business. And there are other companies that were just as big going, nah, now that we know that everybody can work at home, why do we need a call center? Right? We can have all our calling people work from their own house, and we don't need to pay for office. So there really is, I think, going to be a bigger bloodbath in office than there's going to be in any other sector. Personal opinion, I could be really wrong, guys. Okay. So I'm just told you, I made my disclaimer. I'm not sure I want to project on this one.
Crystal ball.
But my crystal ball guess is that office is going to have a higher permanent vacancy factor because people realize they don't have to return to work. But I do think hospitality is going to return. As a matter of fact, I think hospitality is going to be streaming. I really do. I know that's your business, and I'm not just saying it because you're your business, Patrick. But I think hospitality is going to be streaming because what are people missing? I'm missing movie theaters. I know lots of people that are missing travel.
Yeah.
Right? Right. See, Sandra, you're just like, yeah, baby. Absolutely. There are people that are like, you don't understand. My life is not fulfilled unless I feel like I can see another part of the world.
Yeah.
Right. And this moving, this high amount of moving inside of real estate, single family, is almost based in that same bug.
Yeah.
Right. So I think hospitality is going to come streaming back. I don't think there's anything we can do about that. I
agree. Well, and I'm not just saying it because that's my industry, but yeah, I personally believe that I'm looking, I think it's going to be a great time to pick up hotels over the next 12, 18 months. I think we're going to see a lot of hotels. Boutique hotels is kind of my area. So, seeing a lot of these properties that are distressed now, they've hung on, they've done everything that they can. I think that a lot of their backs have been broken and that a lot of them don't know it. And so I think, especially for our business, we're gonna see a lot of we're gonna have a really great next 12 to 18 months. Also part also in consulting, helping people come around. So I agree. I think hospitality is a big one. And I was, curious to hear what your thoughts were on office. And that's interesting. I mean, so what about you, Christina? I mean, what have you got your site set on? And where do you feel like you can take advantage of, and what's an opportunity?
I have to confess, I am an old dog that's not learning a lot of new tricks. Just so you know, I start with that confession first, right, Andy? I see Andy shaking his head going, yeah, we know that one, right? So what I do and what I've done for 30 years is some version of residential, right? Dog my foot. Thanks, Bill. It's residential. It's rentals long-term, rentals short-term, flipping, hard money loans against flips, hard money loans to on primary residences before I couldn't do that anymore, right? Taking an apartment building and effectively flipping it or turning it around, right? Owning in-state, owning out-of-state, residential. So I'm a residential chick, right? Condo conversion, like lot splits. That's the stuff I've done. I'm going to keep doing that. That's what I'm going to keep doing. So what am I looking for? So I'm looking for mom and pops. Because ever since I sold everything in 2009, right? 2008 and 9, I sold everything because there was all kinds of, things going on. Basically, the Great Recession was going on in my portfolio as well as just freshly married and trying to get pregnant, which is not good during the Great Recession to try to get pregnant. One is a little stressed, right? So I sold everything. I've been looking forward to buying rentals, short-term rentals. That's the asset I like. I don't really want long-term rentals as single families, and I definitely don't want them in California. So I'm looking for short-term rentals outside of California. Hi, Matt. Yes. I'm looking for short-term rentals outside of California, and I'm looking for those mom and pops. That's what I'm looking for. That's what I want to develop my real estate portfolio into. Yeah. And also, I'll tell you just one little piece. And also, because I am getting older, I'm more and more interested in investing with syndicators so that the old dog, doesn't have to learn how to do storage units in order to take advantage of the upturn. And I don't have to figure out how to take advantage of strip malls. I don't want to be in business with 20 different people. I have a harder time running my own business. I don't need to be in business with them.
Yeah. Great.
So that's where I'm going to be.
Okay. And I think a lot of people are interested to hear that. I'd like to kind of shift gears just a little bit here.
When are we supposed to be done, Patrick?
We've got 10 more minutes.
Okay. 8:30.
Yeah.
Cool.
So just shifting gears, a little bit again, back into that mindset kind of thing, because I remember it was the first meeting, the very first ever RIA meeting that I had ever been to, of course. And, it was your meeting. And I don't know, you remember it was the meeting with, oh my gosh, his name, what was his name? What's his name? It just went out of my mind.
Jay Massey?
Jay Massey. It was Jay Massey. Thank you. I mean, and I remember Jay Massey saying, I remember him saying, I was in the second row. I was like, or I might have been in the first. I was so excited. And it was just like, I had never been to one of these. I had no idea what to expect. And And I remember him saying, there's someone out there, there's someone at this meeting who had to, who barely made it here, who is here because they're looking for a change. They're frustrated. They need this. And that really spoke to me, because I had to borrow $5 and someone's car to get there. And I remember I got there and I didn't have enough money to pay for the parking meter. Right. And I had enough to pay for a little bit. And I was just, please God, please don't let me get a ticket. And I had to run out and move it, And so to hear him say that, and it was great. And I realize now, obviously I've spoken at many RIAs now, and, it seems there's always someone that comes up to me at the end of those meetings and says something just like that. Right. And so I'm sure that with all that we have going on right now, that there is someone here right now listening to us talk about this, and who is scared shitless, and not sure what they can do. Maybe they're here just trying to get some ideas, and they're not sure that they're maybe going to make it, and here we are talking about resiliency. And I wonder, for me, when this pandemic hit, and being in hospitality and a hospitality investor, this was like, it was a tsunami coming. That was that's how I felt. It was like, okay, there's a tsunami. It's a long ways out. It's in China, but that's going to come for us. I know there's members of my team here tonight who can attest to even, those conversations we had. And the thing for me that was different this time is in 2008. And in 2008 is when I froze and I lost everything. And as you know, I ended up homeless on the streets, and so I remember it was March 12th was the day that I was at one of our properties, and I thought, holy crap, this is another existential crisis I'm facing here. Am I going to make it through this? And a lot of the thoughts that I think that there are people here probably having, how am I going to do this? And what I did was I took out a piece of paper, I put it on the wall. I love these 3M Post-it things. I have hundreds of them, and so I stuck it on the wall and I put, how are we going to exit COVID? And because I was not going to allow myself I just wasn't going to give up this time. I was not going to do that. And so I want to know, what did you learn? And that's something I learned from back then. And I just said, we're going to come out of it better than we went in. We're going to come out of it stronger. We're going to come out of it educated. We're going to come out of it organized. And I wrote that, up. And because that's the resilience, right? That was my source of resilience in that. And so I wonder, what do you say to those people in a way that, how's the lens different for you now? I'm sure that there were points where you caught, just as I did, nope, I can't think that way. Nope, I learned this in 2008. I'm not going to do that. Nope, I'm not going to do that again. So what does that look like for you? What are the things that played in your mind when this started? Obviously, with all of your knowledge and background and how you're so great in the economics, I want, what was going on in your mind, and how did you build that resilience through those thoughts? And what do you want to impart in others?
Okay. So let me just start with something you said, because I think that's incredibly valuable. Because you just did a really great job of saying what needed to be said. So thank you.
Okay.
So my suggestion, my challenge to you guys that are sitting here in this virtual room with us is to either write on a piece of paper, write it on your arm for all I care, write it in the chat. But how are you going to do something, whatever it is, so that you leave COVID better than you were when you went in it? Because that's what Patrick just said. How do you step out of COVID better? Is it greater education? Is it loving your family more? Is it straightening out your priorities? Is it pre-applying for jobs? Is it finding out where you want to work next? Is it just being able to understand yourself better? Like I just did the building, what's it called? It's put out by Strength Finder. I just did this thing called Strength Finder. Not very expensive. And it helps you identify your 10 biggest strengths, right? Andy's going to restructure his financial. Paul's going to do education and build connections to find my next deal. So what are you going to do now? Because I can talk in generic terms, and I've tried to be as specific as I can, but you know your life, you know yourself, you know what it is that makes you excited. So you know what you can commit to. Because if you're feeling stuck in COVID, which I have been feeling stuck in COVID, if you're feeling stuck in COVID, what you can do is give yourself the direction to head out. And Patrick hit on it. So write down, what are your 3 things that you're going to do in COVID to leave COVID better than who you are before you got in?
Yeah. And that's, I think
You said it, Patrick.
it's key.
There's not a lot to
it
add.
really is key. Yeah. But I mean, and I also, so it sounds to me, and because you have been through these I mean, how many downturns have you been through?
This will be the beginning of my 3rd. This one is still not finished.
Right. Which I think is
like
a big
1.2. So it's like 2.2 downturns because we're only like 0.2 into this one, right?
And that's what I think, honestly, my biggest takeaway from this talk tonight is I think that I have maybe become a little bit complacent, and maybe that's not the word, but so focused in on that part. Just, okay, we're going to keep going. I'm not going to stop. Just keep your head down, keep going. On really, maybe you've helped me look up and see, where is the tsunami right now? And it's a great reminder that we are living in the tsunami. And nobody can tell us. It is a crystal ball as to where we are in it. And I think a lot of people are still going to get swept up. And I think that that's kind of an eye opener. And to hear you say we're at the beginning,
Well, we're at the beginning, and it's not going to be so big.
Okay.
I think what's important is
more like a surge.
That it's going to be, people say, oh, it's going to take us a decade to unravel from COVID. No, it's not. We're America. I don't mean to be a pain, but it's not going to take us a decade, right? As a country, it's not going to take us a decade. As an individual regional area, it might, right? It took Las Vegas a long time to unravel from 2007 and 2008, right?
Yeah.
Florida,
because of their regional circumstances.
Because of the regional circumstances there.
Yeah.
So that's why I have to go back into, well, what are you going to do personally in your life to prepare yourself moving out is actually one of the best answers.
Yeah.
Right.
And also, I think educating yourself now as far as what are those regional circumstances. So, in Vegas, we had the construction boom, right? And I think, and we're here I am, talking to you from Mexico tonight. We talk about, there's different circumstances. And I think that's one of them. It is. It's like, what's going on here? And also, you asked, for instance, about Atlanta. So I'm guessing you really want to know what those local circumstances are. I'm guessing you're the due diligence queen, right? So
I like my due diligence. I'm
I'll
guilty as charged.
That how is that due diligence, going to change? Is I wonder. I'm sure it will. Some extra points for COVID. Right. So there's probably some other things that you're taking into account.
I know it sounds super weird, but my due diligence may not change a lot.
Okay.
Because COVID, having a pandemic, the last time we had this was 1920 when he had the Spanish flu. And we might have another pandemic.
Yeah.
But like I'm involved, I've invested in a syndication deal that was considered well diversified. Right. It was multi-units, elderly care, and hospitality. So if you think about the effects of COVID, 2 of those pretty much got wiped out. And even multi-units is a little bit of question, but because it's a large industrial size, is not having a problem. You see, I could prepare for every black swan event possible, but
it's funny. I was just thinking black swan.
right. I can't. So right now I already keep my portfolio in thirds across different asset classes. And inside of those thirds, I have diversification within that.
Yeah.
So I have like stocks, which seem to be doing really well because the government's supporting it. I have hard money loans, which are against some flips. Some are against primary residences. Some are against people's buildings. And I had what was my own flips, which are being rolled into short-term rentals. Mm-hmm. So I can't prepare for every black swan.
Yeah.
And we may not see another pandemic based on results.
It's a black swan.
For another 80 to 100 years, maybe. I mean, I understand there's all this research. Anybody who's been researching about it, my sister is into the medical, so I hear it from my sister. You know, we might see another pandemic in 60 years instead of 100 years, but it hasn't shifted. So no, I already believe, because of my years of experience in diversification across assets, and I already believe in, if you're going to do something passive, have 10% of your net worth in that thing that's passive or less. I already believe in being able to use other people's expertise to be able to bring diversification inside of my portfolio and not needing to be the main partner in everything I do. Mm-hmm. Right. I already believe in being in multiple regions. So honestly, it's not going to change my investments that much. Truth be told, it's something that's going to come and it's going to go. And I've been investing, and I'm going to continue to invest for another 30 to 40 years until I'm declared incompetent and they take the pen out of my hand.
Well, I'm sure everything will be well put away in trusts and other.
Yeah, it will be at that point. That is completely correct. You're right.
Absolutely. It's all going,
So that's a good question, but no, it's not going to change my due diligence very much, truth be told.
Interesting.
And
I need to get you down here to
pain.
Mexico. You know, I mean, you got to diversify. It's time to get outside the country.
You know, if there is safety in investing in Mexico and you can show me how, I will consider it. I have never invested outside of America because I've never known and have not been educated in how to safely invest in these alternative markets. Alternative to me, because I'm an American, but not alternative to you.
Yeah, well, I'd love to get you down here just so I can, so you can ask some of the questions that I probably haven't even asked yet. Right. So,
I will ask lots of questions.
I know, and I love it. Yeah. So I'm excited.
It is the ADHD dyslexic brain, right? It is the gift that I bring. I can see it from multiple points of view, and I get paid for it, baby.
Yeah.
So,
and me too. And that's why I love you. You know, I love Christina, you know, always just, gosh, the energy, you know, I always feel, you know, after we talk, just such great energy. And I'm sure that many people here in the room tonight are feeling that. And I think you've given some great insight. I'm looking forward to the questions people have. And I think what I'd like to end with is this question. Why is now a great time to invest, and in what?
Now is a good time to invest in yourself always. Let's just start there, right? But beyond that, what's a good thing to invest in now is
first it's the why is now a great time.
Why is now
a great time to invest?
Why is now a great time to invest?
For people who are there's you know, we always have people starting, and I know there's people here. How many people, if you're just starting and questioning, you know, just go ahead and pop something in the chat there.
By the way, how did your poll go?
Oh yeah, it was basically, you know, what we came up with was, you know, people are kind of, as we talked, you know, we said in the talk.
There's seriously nobody who feels like they're sinking.
Nobody's sinking,
guys,
which is great.
I have had days where I felt like I was sinking. Come on, right?
I've
had days where I'm sitting there going, my daughter's sick, my husband's over 70, right? We've got, you know, I can't leave the house, I can't order groceries, I can't possibly bring COVID in, we can't do a play date to make my daughter entertained. What am I gonna, like, you know, or I'm like, I just can't face it today.
Yeah.
No, you do anyways, right? You face it anyways.
Yeah.
Right? So why is now a good time to invest? Why now is a good time to invest is because markets are still active. and they're still engaged. There is absolutely, if you're a flipper, most of the people I know who are flippers are doing better than they were doing before COVID.
Mhm.
So if you're a flipper and you feel like you've got a market that you feel solid in,
and your systems are down and you know
and
what
your
the hell you're
systems are
doing.
down, you know what the hell you're doing,
Yeah.
guess what? You still probably got a good, I was waiting to see when the mass move was going to slow down, and it hasn't yet.
Yeah.
Right? I thought for sure we'd have a lot of mass when they showed up, right? We'd have a lot of people move up front because they were like, I'm in this little house and I can't stand it. I need to move, right?
Yeah.
Let's not postpone the correction. National real estate cash, that is the long overdue. Okay. Very good, Henning. I can't talk to that one right now. But you can do that right now.
Yeah.
Right? If you're looking and you find a mom and pop multi-unit that's clearly struggling now,
Yeah.
don't pass on it. It's really basic. The long-term game is based on the numbers work.
Yeah.
Right.
And the distress, and we're looking for distressed properties. And as you mentioned, in the mom and pops, I mean, there's a lot of just stress actually when we look at in California, especially what's going on with the legislation, right? I mean, so they've got those pressures, not knowing else what's going on. I think it really puts a lot more people in that distress category, especially I think as these are, you got people who are a bit older, who it's like, they already had a plan to get out of that property. They don't need a whole lot more cash. I mean, there's a lot of, I think there's always opportunity.
There's always opportunity. And it's been weird because if you want to, like, one of the things that I would consider as an investor is if you don't want to buy today, or even if you do want to buy today, start researching, because it is so regional and because it is so class specific.
Mhm.
Start researching now where you think you're going to want to purchase because of where the bath is going to be.
Okay.
Start understand New York. I'm looking curious. I'm super curious about what's going to happen in New York and the severity of their lockdown.
Yeah.
Mexico, where you are in Mexico, clearly there's going to be opportunities there. I'm in LA. Orange County isn't going to have as many opportunities as LA County because LA County has been more stringent with our lockdowns. Mm-hmm. Right. So you're just follow the COVID map. Where has COVID been the most extreme is probably going to give you an opportunity to invest in places you may not have invested before. And I think LA Times had a COVID map. It was like 4 to 6 months ago, but there's got to be an updated map where COVID has had the most extreme effects. And if that's in a city you want to invest in, remember, COVID is temporary.
Yeah.
It's
an overlay. It's really an overlay.
It's a 2 to 3 year influence that's it's going to take time to unravel, but ultimately it's going to disappear.
Yeah.
And we're not going to be wearing masks, and we're going to be going out to restaurants to eat with a bunch of friends.
Yeah, and hopefully richer.
If
richer we do
friends.
It right.
Richer friends, right? And so it's temporary. Investing in real estate is a long-term game. So play it like a long-term game. Where do I want to play my cards next? Start deciding now.
Great. Well, there's been some really great stuff in here. So I'd really like to get to turn it over to some questions. And see what we've got here I've seen a ton of messages coming through.
There are a ton of messages, but a lot of them are not questions. People have been doing what I asked them to do, which is post information. Yeah. So post information and conversations back and forth. So you might not find very many questions in there.
Yeah, a lot of great stuff. Let me see. Raise your hand if you have a question, and you do that by pressing the reactions button down there, like I just did. Give myself a little high five.
No, high five.
And I don't
think you're going to have a lot of questions.
Okay. We'll and at this point, what we're going to do is here we go. Janice asks a question. What other states are you investing in? She says all of her Utah renters are paying.
Okay. I'm invested in Indianapolis. So I used to be invested in multiple states before the 2007-8 meltdown. And then I literally sold every door I had. And so the only place, and then I switched over to hard money lending and stocks. So I was primarily doing syndications. I was primarily doing hard money lending all the way up until 3 years ago, where I started doing flipping inside of California. And then I've decided I don't really want to own rental properties in California. So I started transitioning my flipping portfolio over into short-term rentals in Indianapolis. And I'm willing to have long-term rentals, but only in like complexes, right? So larger sizes. So let's see. Did you have any private lenders in 2007? What do you mean, Andy? So Indianapolis is where I ended up. I researched 4 different cities while Andy's unmuting. I researched 4 different cities and ended up with Indianapolis being the one that I liked the best. So I looked at Detroit, Pittsburgh, and Cleveland, and I ended up in Indianapolis.
The thought was, you said you lost everything in the Great Recession.
No, I didn't lose everything.
Well, you dumped
I
out
lost
everything.
a lot and I sold everything. And what I had left, I turned over into hard money lending.
So the question is, was any of the stuff you sold off, was it financed with private money? Or was it all institutional?
No, it was all institutional at the time. No, I actually didn't.
If you had private lenders, do you think you would have been able to carry those through the dip?
No, I had a property in Oregon, which I had to sell as a short sale. My business partner's condo was a short sale. And I had a condotel in Hawaii. There were short sales. Don't do a condotel, just saying. Unless of course you're Patrick, then do a condotel.
Yeah. Well,
right?
even then, I'd rather just have a
no,
regular.
don't own the condotel. Just let Patrick, right? You know,
I'll manage it. But
right. But I had several multi-units I sold, and I was not short on those. I had cash in those, even though I sold them at a loss. I had cash in them as far as equity. So, and none of those were private. There was one that I had that was with a company I used to call something fuckers. Excuse my language, but they were, and they were a pain in the ass to do a short sale on. They were my condotel company. They were the closest. They were a private equity group, but they were not hard money.
Well, I wasn't asking about hard money as much as private, because I tend to not fret much being a 0 FICO score person. My loans all come from human beings. And the flip side is I can't not pay them because they expect me to buy their groceries next month.
Mm-hmm.
So when you have private lenders, it's a double-edged sword. You know, you got to pay them. If that means you do crazy things, you do. And Rashida is sending me private messages that aren't for me. They're for you, I think. She wants to know when your due diligence class is next.
Thank you, Rashida. I do have a due diligence class. It's called the Mastermind, Christina Suter Mastermind. I just started it. I teach it about once every 3 months, and I literally just had my second class today. So I will probably be starting my mastermind again. And thank you for asking. Although Andy, that might be for you as well. January, February, March. It will be probably second week in April would be when I would start it again, or it would be in June.
Yeah, I teach math class, and I would feel uncomfortable teaching a due diligence class.
I love teaching due diligence.
I'm
reworking my due diligence slides right now, as a matter of fact, for this class. I'm looking forward to it.
Being a small deal kind of guy, my due diligence is walking in the front door, telling myself that if I lose everything I invest in this mobile home flip, am I going to have to declare bankruptcy? And the answer is always no.
And no, then you're fine, right? That's your due diligence.
So that's about as far as I get in due diligence. It's just not my thing.
Right.
So
yeah,
Christina?
no, yes.
Oh, sorry. Were you done? Andy, I had
no. I talk to me.
Alvin.
Talk to me is better than
Trust
chat.
me, I
Remember,
can
I'm
talk way too
dyslexic.
much.
I don't like reading.
So I have a question for you. I was always told by Andy I'm not allowed to talk about Detroit. I don't know if anybody's told you. You can't talk about Detroit in front of, well, not in front of Andy. You just can't talk about it in front of
Andy, you have to turn off your camera because Alvin's not allowed to talk in front of you.
I can remove him.
No, don't remove Andy.
That would probably make it easier.
Yeah,
but, no. My question is, why? What was it about Andy that you found to be attractive? I actually know somebody up there that's been doing quite a bit of work with an investor, and until I was talking to him, I didn't know that it was a thing.
The question is,
What I find attractive about Indy.
Why is Andy attractive?
I know
Yeah,
you did say Andy.
what do you find attractive
Andy
about
has a beautiful long
Oh.
beard.
About
I love
Andy
his
is
Santa
Indy.
Claus look. Andy is awesome. He's hot, honey. He is seriously hot.
So
You
have
don't
you
know.
seen
My
the
husband
movie?
is over 70. I like older men. Like, come on.
You're telling the wrong people. You need to tell my wife.
So have you seen the movie Andy Does Indy?
No.
You haven't seen that movie yet. Okay.
Is
All
that
right.
a
Well,
movie? Okay.
it should be a movie.
It should be a movie. Andy Does Indy is a great title.
Andy Does Indy.
No,
Okay.
you don't want to know what my head went on that one, Alvin. I'm just telling you. Thank God we're all over 18 in this crowd, right? Okay, I'm just making sure.
We're all friends here.
We're all friends. So what I liked about Indy was I liked the diversification of the industries that were there. What I liked about Indy was that I liked that there was a strong city center and there were multiple different suburbs that were well structured around that city center. I could choose between a mid and upper end property, or I could just be just under mid and still be able to do short-term rentals with the high level of tourism that was there, as well as medical facilities. And I was able to build a team on the ground that had a history, because my previous flip partner already had a team on the ground there, a real estate agent, but basically I had a wholesaler. But I found my own wholesaler. But she had a real estate agent I met with and a contractor I met with. And I ended up not actually using her team. I ended up developing my own team. But once I had started developing my team, I could expand out and find everybody I needed. So that was how I ended up in Indianapolis.
Okay.
Because honestly, for me, picking real estate is about half is about the real estate and half is about the team. I can't, you know this, Alvin. I can't purchase unless my team's got something for me.
Absolutely.
Right? So, because I'm not going to fly or live in Detroit to flip, and I'm not going to live in Indianapolis to flip, I'm going to buy something long-term, and I need my team to be the thing that holds my hand, hold my little hand, and make sure I'm successful.
Right. Okay. Definitely. So with Indy, when you talk about the strong city center, is it, because I know, just from me watching football all day long, I know that they have the stadium there and there's always a lot of activity surrounded by that. And the sports teams are really strong and there's a university and all that. So is that all that went in?
There's a sports stadium, there's a university, there's a strong medical center there as well as the general industry of Indianapolis being a solid city.
Okay.
Right. So it had multiple things that were attractive to me when I was looking, by the time I got to Indy, Alvin, I had decided that I was looking for short-term rentals. Okay. So it had a lot of things there that were useful to me as a short-term rental owner versus for flipping. Because honestly, flipping in Indianapolis isn't a lot of fun.
Right. Okay.
Short-term rentals, I like those.
And was that Aaron that kind of put Indy in your head? Aaron Gill, because I know he had done some rentals in that market.
No, it might have been him who put it in my head, but then I had a client who was in Pittsburgh, so Pittsburgh was in my head, and we had conversations about Detroit, so Detroit was in my head. So it was people that I had talked to that were having success there that made me create my list of where I was going to start doing research. In Detroit, Cleveland, I was, there's so many people flipping in Cleveland. Black Belt Investors is out in Cleveland. So that was why it was in my head. I had a client that invested with them. So that was where I got my list. And honestly, guys, people think I come up with this completely like, Christina's the due diligence queen. She must have done research 30 cities in order to get the last 5. And no, I'm sorry, I didn't. Because I happen to know that there are so many neighborhoods you can invest in. There are at least 250 neighborhoods across the United States I could choose from that I would do just fine in. I do not need to be in the hottest, coolest, most current, highest return, highest growth place for a rental to do just fine, or for a flip to work. I just need the finances to line up and a team that's going to be able to work with me to bring product.
Okay. Thanks, Alvin.
Thanks, Alvin. Okay. Call me if you want to talk, honey.
I have another question.
Oh, hold on, Andy. Let me put Andy there. Okay, go ahead, Andy.
Henning has this great conversation, guys, going. If you haven't noticed, Henning, I
Henning
love your
always has a
authenticity,
conversation
dude.
going.
Is it? He's doing great. I love it. Okay, Andy, what's your question?
So there's been rumblings about this new law that California is going to do, and if you are in the state for over 60 days, they're going to want a percentage of your worldwide income based on the number of days you come to the state.
Yes.
I think that's going to destroy our snowbird market if they manage to get that passed. I think that what we have here is wonderful as it is. It's available in Arizona and some other states as well.
Say it again, Andy. Clarify that a bit. I missed like about.
There's a law they're trying to push through our. Don't get me started on how bad our government is. The state of California, and their goal is to tax anyone who comes to the state for longer than 60 days. That's a total of 60 days. If you're here, if you were to come here and have a surgery because there's a renowned surgeon and you were stuck and had to spend 3 months in the hospital, they would want to get the proportionate number of days. So if you're here, 60 days, 2 months out of 12, they're going to want a sixth of your income. They're going to tax a sixth of your income wherever you make it in the world on our lovely expensive California income tax. That's the proposal. If that happens, it's going to really bruise my particular market. It's going to be stomped pretty bad, I expect.
What's your particular market, Andy?
Palm Springs.
Palm Springs. Okay.
I mean,
I didn't know if you were talking, when you said your particular market, I didn't know if you meant mobile homes.
Wobbly boxes.
Or Palm Springs or the desert
well,
as
but
a whole.
Here's the thing. If your rich friends aren't coming down here to hang out, and if you just want affordable housing and hot air, you can get that, which is who we sell to, and we sell to the people that work for the rich people that come here in the winter. The service industry clientele, that's a lot of our tenants, because I'm in affordable, and if the employment base leaves, if we lose the snowbirds, it's going to really hurt us. And I know that this is not the only part of California that's going to suffer from that. We all see snowbirds in every community across the state.
All right. So Andy, I don't know the number. I'm going to answer your question as best I can, right? Snowbirds in California percentage. So this is how I attack these type of questions if I was doing it for myself. And I don't think I can do this now, but like basically the snowbirds are a market that you're close to. It's a regional effect.
Yeah.
Right. So you go regionally, it's going to be a pain in the ass, but is it really going to be a pain in the ass for all of California? Maybe not as much. California currently, do you know if you're a professional ball player and you play a game in California, you're supposed to pay California part of your fee for playing ball?
Yeah.
So California is currently already doing something like this. So I think it's going to be an effect where your region is. But if you want to understand it on a more wide basis, do some Google research, look it up on your phone.
Google grease.
Right? Huh?
Google grease.
Google grease. Yeah. Is that what it is?
It's like the reader's guide, right?
Google grease.
I guess so. The best guide to California for Canadian snowbirds. So look up what percentage of our population really is snowbirds. You'll find in your region, it's a high percentage, but in Pasadena, it's nobody. Right?
That's true.
In Arcadia, it's nobody. And, it might be some, in Malibu, it's probably nobody, but maybe in Hermosa Beach, it's some people.
Yeah.
So I don't think it's going to be such a big effect that it's going to be that noticed, except in markets that are sensitive to it because it has a disproportionate percentage of people.
Yeah.
So look up your percentage and figure it out.
Gee, somebody made me a host. How'd that happen?
Wow.
No, I made you co-host a while ago, Andy.
Okay. Co-host.
Yeah, throwing you into the that's probably a good segue into our final kind of lounge session here. So usually, Christina, people, our speakers will hang out and ask some other questions, just kind of chat in kind of a more free forum. Andy is the master of the late night lounge. So Yeah, you are, right. You're the one who's been doing it the last 4 months. So yeah, it's like, it's 11 o'clock for me. So I'm usually off to bed. So yeah, so let me go ahead and let me take that. So just finishing up here in this part, Christina, thank you so much for taking this time tonight. This was great. Always great to see you, and what a great thing that we can sit down and talk about. Not just our ADHD minds, but also real estate investing and sharing that passion with others.
Resilience.
Resilience, which
ADHD
is,
builds resilience.
Sure as heck does.
Yes,
Yeah.
it does, baby.
If not just from looking for your shit all the time.
That's good.
Yeah.
That's good.
So again, thank you so much on behalf of the committee and on behalf of everybody at the club. And I look forward to, when I'll be seeing you here soon, hopefully when we get back to the clubs in person. I'll definitely be up there around June is when, as I said, I'm starting my adoption process here soon. Yes. So I will be, so I have to establish a new residence there in LA. So you better believe it that you're going to be seeing a lot of me.
Okay. So, I look forward to it.
So looking forward to that very much. So thank you so much. And at that time, at this point, I'm going to go ahead and turn it over to Andy.
Well, I want to take a minute and thank Christina. And I didn't hear her pitch her speaker for Pasadena FIBI.
Ah.
Thank you for the reminder. I meant to do that. So my speaker, no, it's okay. My speaker next for, we have 2 FIBI meetings a month, right? So we have a multifamily and we have the traditional FIBI Pasadena meeting. So the traditional FIBI Pasadena meeting is the 3rd Thursday of the month. And we have Bruce Norris. Coming week, February, this coming month. And then the following month, we have Neil Bawa, which I was particularly excited that he agreed. And they're probably both going to be talking about in much greater detail and even with more knowledge about how they see COVID unraveling and where they think the economy is going to go and where the opportunities are going to be in real estate. Maybe a little less emotional, mental information, probably a little more financial. But it was always good to hear the experts come forward and really, really talk. So so that would be good to have. And of course, to look up our multifamily meeting, I'd have to look up who the presenter is, but it's easy. Go to meetup.com, type in FIBI, FIBI Pasadena, you will find it. If you're looking for me, it's very simple. It's ChristinaSuter.com. Really easy to find me on the internet as well. Anything else?
Wonderful. Well, thank you once again.
I'll be hanging out. I'll be one of the faces.
And I've gone ahead also, just one more time, gone ahead and posted your YouTube link in there.
Oh yeah. I have a lot of my podcasts are there.
That's great. I saw your new blue background.
Yeah, lots of blue background in the podcast.
Yeah.
I have my speakers there. I have my quick tip. I have my, I'm actually doing coursework there as well, my educational segments. So there's a lot of free content on youtube.com. Christina Suter, and a lot of free content on FIBI Pasadena YouTube as well. I think there's over almost 3 years worth of Pasadena, FIBI Pasadena presenters on FIBI Pasadena YouTube. So I try to give away lots and lots of free content so that people can learn.